Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into Chit Chat Stocks, a podcast to help you find your next great investment. Today we have on Ian Bezek from Ian's Insider Corner, a recurring guest and what we call lovingly our Latin American correspondent. We're going to talk about today Argentina, Chile, and Colombia, how to invest in these regions, the political developments going on there, why some of the stocks have been doing well, poorly, and what are the investing opportunities in these regions, as well as Latin America as a whole, which has done quite well over the last year or so. But first, Ian, let's talk broadly. How do elections and political developments impact how you invest in Latin America?
Yeah, first of all, thanks for having me back on the show. It's always a pleasure. Looking forward to this discussion. I think it's a great introduction question. I was actually looking at some of my old writing and tweets recently. Remembered that as early as early 2024, for example, I was calling out the Colombian stocks were kind of making record earnings, record revenues. Kind of the underlying economy was doing very well, yet no one wanted to buy those companies. They were just off the radar. The government was socialist, so this is just something people aren't looking at. But at the same time, those companies continue to generate shareholder value. They're executing on their business plans. I think an election gives you a catalyst. Like it'll be on the front page of The Economist, on the Wall Street Journal. Kind of, it's the one time every 4 years when a hedge fund manager thinks about Colombia or thinks about Brazil or whatnot. So you get kind of a chance to get a re-rating because the numbers have kept changing, the earnings have kept going up, and then now you have kind of the world's attention on that market for that brief period of time, and that's when you get a lot of the returns from these markets because it's just their one moment of visibility.
Okay, we're going to talk about a few countries here throughout the episode, but let's kick things off with Argentina. Argentina just had their midterm elections, and the results were very favorable for Milei's party. What do you think the result means for Argentine stocks and maybe just the economy in general?
Yeah, so Milei was elected in 2023, and there was initially a ton of investor excitement. I think the local index roughly tripled, but some doubts came in earlier this year. People were talking about Argentina running out of money, that they would need bailout from the IMF or so on, and ultimately they did get an aid package from the US, and so a lot of people had thought that meant that his economic reforms had failed. So that's why these midterm elections that happened last month were so important, because they showed that voters still stood behind Milei, were willing to give him more opportunity to keep reforming the economy. The GDP numbers have been very good, more than 5% growth this year. He's gotten inflation down from 300% to 25%. Obviously, 25% is still way too high, but big step in the right direction. Big jump in private sector employment. I think the economy is on a good path. A lot more needs to be done, but I'd say I'd give him an A for his efforts so far, and it looks like voters agree with that. And then now he's got another couple of years to keep making reforms. Obviously, that should be constructive for the stock market. And also having the favored trade status with the U.S., you've got kind of the Argentina-U.S. trade deal in a time when the U.S. is putting tariffs on many other competitors. That's very beneficial to Argentina for their exports. So I remain bullish, upbeat on Argentina. I think it's going to be a good trade for the next, call it 2 years.
The last few months, or maybe just the last few weeks, just for reference, we're recording this in early November for anyone listening down the line, there was the election, as you mentioned, but there was also a lot of talk about just destabilization with the currency. There was the emergency currency swap that the United States government did there. Questions we had before the show was a lot of the line, from listeners was, well, is the recovery in Argentina actually happening? And I guess this is kind of turning into a two-parter question, but what was the problem with the currency, and what do you think would be something you're looking for from an investment perspective to be more confident in the currency risk with that market? And then second, is the economy actually doing well, or is it just a lot of news?
Yeah. It's Good. Yeah, good question. And yeah, I'll take that in two parts. First, on the currency, I think the one area where Malay made a mistake was in terms of he tried to keep a peg, or at least to closely uh, regulate the exchange rate between the peso and the dollar. And I think he set the rate little bit too strong in terms of having an overvalued peso. And in doing so, a lot of people were deciding to move their money out of pesos into dollars. So you had kind of speculative people betting that the currency was going to get devalued. But I would say that that's divorced from kind of the real strength of the underlying economy. Like that's monetary policy. That's not like the actual GDP is doing well. Inflation's come way down. Private sector investment flows are very strong. People say, oh, the economy's not that good, particularly in Buenos Aires, but he fired like 20% of the government. So that's a lot of state employees that are now looking for work or need to be retrained or so on. So obviously you need some time for that to kind of shift. You need to have capitalism long enough for private employers, particularly multinationals, to say, oh, I want to open stores in Argentina. I want to build a branch here. I can do manufacturing here. You don't get that in 12 months. So, yeah, I think it's a gradual process. But yeah, I think the underlying economy is doing well. If I were him, perfect world, I don't think you set the exchange rate that high. I prefer free floating exchange rates. I do think the peso is a little bit overvalued. Hopefully, now that he's won the election, he can kind of let that loose a little bit more. I know some of his policy advisors even are urging that, but it's up to him in terms of how he wants to take the currency. But yeah, I think ideal world it should devalue maybe 20% from here. I don't think that undoes like the bull thesis for the stocks.
And you mentioned the fact that they had this huge I forget how to pronounce the old regime's political party, Peronist, I think is what it's called. They had just a massive amount of government employees and state-run stuff. And do you think the fact that Malay's party, people aligned with him, won big at the recent election, despite the fact that all of these workers were fired and maybe disillusioned with them? Because I mean, frankly, if you lose your job, you're not going to be happy with the party that fired you. Do you think that is a good indicator that Argentina, and knock on wood, never say never, is finally done with this anti-free market stuff?
I think it's too early to declare permanent victory on that front. Argentina's had generally bad governance and economic management since the 1950s. That said, there was a whole decade from, I think it was 1989 to 2001, that they had very free market, pro-business measures. So that was 12 years where they'd appeared to have finally gotten kind of more on track. And then even that ultimately went off the rails once again. Yeah, I think at the heart of it, you have a different electorate than the rest of Latin America. Most people are very European in nature and in thinking. Like I've stayed at various people's houses in Argentina, and everyone can trace their family tree back to like 1820 in France or in Italy. So it's a very different culture from like Colombia or Mexico or whatnot. So I think there's a lot of sense of like we're different from the rest of Latin America. We deserve kind of European style socialism, Scandinavian style policies, but there's not really the tax base in Argentina to give you the same government benefits that you could get in like Sweden. So I'm not sure if voters have really made peace with that fact, or they're just so frustrated by the recent 300% hyperinflation that they said, we're going to give this libertarian guy a shot.
So you mentioned on the Argentinian peso potentially being overvalued, and part of that is the peg to the U.S. dollar. How would you go about? This might be a complicated question, but how do you go about unwinding a peg to the U.S. dollar if you are Argentina? Is that like you just kind of bite the bullet and one day your currency drops by 20%? Is it like, or is there a way to sort of smooth out that process?
Yeah, to be clear, it hasn't been a hard peg. Like there's been some fluctuations since Malay's been in power, but just kind of the central bank will, if it starts dropping quickly, the central bank will intervene to smooth it out. Uh, and then Malay talks up the value of the peso a lot. And he's like, if you bet against me, you're going to lose money, that sort of stuff. So yeah, I think you could just kind of cut back the rhetoric a little bit. And I mean, he's a libertarian. He should want the market to set a free clearing price rather than than intervening, in my view. But no, it's not like it's like a 1-to-1 peg where the next day it would be 2-to-1 and everyone loses all their savings. I don't think the peso is like dramatically overvalued. I think you could get there without. I mean, it's what 1,500 now, and I think it should be like 1,800. So we're not talking like a huge move. Just stop intervening in the market for a few months, and I think it would get there on its own.
Okay, let's talk a little more stock specific. One company you've written about several times on your blog is Corporacion American Airports, CAAP for short. I think most people just call it CAAP. Um, what do you think, the elections imply for CAAP, and then thoughts on CAAP generally after this post-earnings bump?
Yeah, so Malay's been very good for CAP, which was to be expected. He formerly was the chief economist for Corporacion America, which is the parent company of the airport company. So deregulation was near and dear to him. Since taking office, he's broken up Argentina to state-run airline, as ridiculous as that sounds in the year 2025. But he broke that up. He's let foreign airlines come in to compete. He's let the budget airlines pretty much operate however they want without restriction. So you have far more local competition, lower prices, so you get more flights, obviously. And then just more broadly, anything that attracts more foreign capital, and particularly more foreign investors, for more foreign businessmen coming through to visit the region. Good for air traffic, good for cargo. Cargo business is up a lot now that kind of more is going on with the economy. That's it. The company is 55% Argentine airports, 45% outside of Argentina. Other major countries include Italy and Brazil. So there's diversification there. I think people are viewing it as just Argentina because it's trading at a ridiculously low EV to EBITDA multiple compared to peers. It's like, is this really that much? Like, historically, the Mexican airports trade at like 12, 13 times EBITDA, and this is traded at 6 times EBITDA. It's like, is this really only worth half of what Mexico, because Mexico is not a pristine credit. I mean, Mexico is more trustworthy than Argentina, but it's hardly the world's most trustworthy country. So does CAP deserve to trade at half the multiple of the Mexican airports? I didn't think so. So particularly when you've got assets like in Italy that are worth more. So yeah, I think this has been a business that's been slept on. Now people are starting to wake up to it, although it's still cheap on an EBITDA earnings basis compared to peers.
Yeah, and I think, and correct me if I'm wrong, I don't have the number directly in front of me. After the jump, it's closer to 8 times earnings, EV to EBITDA. So it still hasn't closed the gap. There's still significant room for those Mexican airports. We had a question, and this one is a bit more speculative, but you follow the airport market fairly closely, so you might have a better read on me on it than me. What, and this is a listener question, what countries do you think that CAP Corporacion should enter next, or if at all?
There would be like my fantasy list, like if I'm building a fantasy football team
Yeah,
of
sure,
airports.
yeah.
But
Fantasy list is perfectly
I
fine.
was gonna say I could do that, but how these come about is that generally an airport operator, or like a government will say we want to sell this airport because we need money, or they're saying we want to build a new airport, we don't have the money, so if you build the airport for us, then you can run the concession for it. And so usually it's not like CAP is just going out and saying we'd like to buy airports in Costa Rica today. That's not usually how it goes. It'll be like whatever, some country needs liquidity or they need a new runway or something. So they'll say, hey, private operators, we're going to have an auction. Who wants to bid? And so CAP has been more aggressive in terms of bidding than most of its peers, which is how they have airports in 6 countries. And from what I understand, they're very close to signing a deal for Montenegro, which would be 7. There's also talk of Iraq, oddly enough. So it could be moving to as many as 8 countries within the next, call it 6 months. But I don't think anyone would say Montenegro or Iraq would be like our ideal countries to invest in. But the countries that had bidding processes open for new airports. But yeah, I mean, I like the idea of mostly investing in Latin America. I think you get a better valuation for having some sort of theme or kind of coherent business plan. But CAP's management appears to be in the mold of we want to have as many airports as possible. Anywhere where we can get double-digit IRRs, we'll go there. So I think you just kind of accept that they're going to, whether it's Africa, whether it's the Middle East, they'll go anywhere where there's airports where they can get like those 15% IRRs.
Yeah, and we're not going to get into it on this podcast, and you have a lot more details on your newsletter, but the contracts they have, especially in Argentina, seem very attractive from one, hedging the currency risk and getting kind of that guaranteed return on invested capital. So it's a good business, I think, for
Yeah,
what it's
just
worth.
very briefly to make
Yeah.
your point there, the Argentine airports, all of their international travelers, they pay 57 US dollars, so no Argentine peso risk. And the government has given them a 16% guaranteed IRR on any money they put into, like they expanded the Buenos Aires airport. I think they spent 150 million on it a few years ago, and they get 16% guaranteed return on that investment from the government. So if there's not enough passengers, they get to raise rates, or the government has to make good, like extending the contract life or in some way giving them that assured return. I spoke to IR a couple of years ago, and it's like the question I always get is like, why don't they pay a dividend? And he's like, well, we can reinvest your capital for you at 16%. Like, why do you want us to pay a dividend? It's a
Yeah,
good question, right?
yeah, it's quite a good business. I guess the last question on CAAP, we see the stock price, it's up, and I'm looking at Fiscal AI right now. Total, this is just the price, not even total return. I don't even know if they pay a dividend. It's up close to 800% in the last 5 years. Done quite well. It's 54% annual return. You've held it for a long time. I think it's been a 10 bagger for you, or if not close to it. I- What a lot of people look at is, all right, the stock's close to an all-time high. The Argentina thematic stuff, people say it might be running out of legs. We've seen a huge bump from that. What is the upside? Maybe I can ask you differently. How are you looking at the investment over the next few years? Like, what would you look for to either buy, sell, or add to your position?
Yeah, I mean, it's a fair point. I think the day we're recording this, it looks like it's going to trade and close at an all-time high. So you can certainly argue the move's already played out. Why not cash out up here? I'd say it's still trading at like 7, 8 times EBITDA, so still a considerable discount to peers. I think if you went through a competitive bidding process to sell off their airports, you would get, I don't know, between 12 and 15 times EBITDA for the airports, depending on which country, which asset. So I think this is still selling well below what it would be valued at to any other buyer. The company used to be fairly levered. It was like 3 times levered during the pandemic. Now it's down to 1 times leverage. Management has said they actually want more leverage, but they just haven't been able to deploy capital because they lost out on a few bids. I think we'll either see a dividend or buyback or something because management is not, I don't think they're going to just let cash build up forever. So I think you'll see actions to unlock shareholder value. Um, and then traffic is actually growing the fastest of, I believe, all the publicly traded airport operators at the moment. They just reported like 15% growth in Argentina last quarter, whereas everyone else is pretty much in the single digits now. So I think the Argentine growth story still has legs. It's their largest business. Yeah, so I think there's still room for it to relatively outperform in the longer term. I'm a bull on global aviation. I have a ton of emerging market people that consumers that haven't flown or have only flown a couple of times. I think the market can still grow a lot. And so airports in countries like Brazil and Argentina, I think there's still a long runway for more growth.
If you're a regular listener to Chit Chat Stocks, then you've probably heard us talk about Interactive Brokers. Here are 3 reasons that Interactive Brokers is better than any other brokerage platform. Number 1, they've got it all. Stocks, bonds, ETFs, options, crypto, you name it. 160 markets, 36 countries, 28 currencies. They are the absolute best platform for global investors. Number 2, best-in-class pricing. They have 0 commissions on US listed stocks and ETFs and offer margin rates up to 53% lower than the industry. And number 3, you can ditch the separate high yield cash account. Interactive Brokers offers up to 3.5% interest on cash held in your investment account. Head on over to ibkr.com. Restrictions apply. Interactive Brokers is a member of SIPC. Is that traffic growth primarily tourism or business travel, or do they even split it out?
They don't say directly, and for Argentina, it's a bit harder to distinguish because Buenos Aires is both the main business airport and the main tourism airport. It's not like in Mexico, you can look at Cancun and Puerto Vallarta to see the tourism traffic, and then like Mexico City to see the business traffic. For Argentina, it's harder to say. That's why I think a lot of the growth is from, like I was talking about, the new airlines that have come in. There've been a bunch of discount, like budget carriers, like carriers from Peru and Colombia and all that have started adding direct flights to Argentina now that they've deregulated. So I think a lot of that is kind of the more price sensitive customers that wouldn't have paid full freight for the state-run airline before that are now saying, oh, Argentina is affordable now.
Yeah, and you can maybe envision a world where what happened in Mexico over the last 10 years with the Valerises of the world could happen in the Argentina or South America region. Would it be, has a specific airline shown up, or is it one of the existing ones like Valeris that are now operating in the country?
Yeah, there's one domestic one in Argentina. I think it's called Fly Bondi, but name could be wrong. But then there's one called JetSmart in Chile that's just grown like a weed across Latin America. And obviously Chile and Argentina are neighbors, so that's will be a big growth market for them as well.
Yeah, makes perfect sense. All right, let's finish out with Argentina. We've talked about the airport operator, but there's obviously more than just one business in that country. You've written about a lot of different stocks that you've invested in along with this thematic recovery within the country. What are some other stocks that are of interest that you followed? Pretty much an open-ended question. What other stocks do you want to talk about from Argentina?
Sure. The other names I've been involved in were the banks, are the banks. I still own them. Just because I think it's the easiest way. If you're wanting to make a bet specifically on kind of the politics and just who's the most exposed to good or bad political developments in Argentina, I think the domestic banks are the clearest play. And so I'd gotten pretty aggressively involved in Grupo Galicia, ticker GGAL, before the election. And then after there was kind of the panic in September, I added some call options on that as well. And then obviously that worked out nicely, but I think there's more upside. That stock was trading at 75 in February, like back when Malay was riding high, and then it traded down to 25 in September, which I thought was absurd. It was trading at like 20 before Malay won, so you were only getting like $5 of credit for the past 2 years of economic progress that Malay had made. So like, everyone had just thrown in the towel at the midterm elections. Now it was traded back up to like 55, which is good. Definite progress, but it was 75 back when people thought Malay was doing well before. Now Malay has a fresh mandate and he has like direct U.S. financial assistance. So I think the banks can trade back to the 52-week highs. So GGAL to 75, and some of the other like BBAR, for example, that one can go back to 25. I think it's like 16 now. So I think there's still some juice on the Argentine bank trades.
Is there any other sectors that you have interest of in Argentina, or is it mainly the airport operator plus these financial institutions?
There's quite a few Argentine companies listed in New York. So if you like the telecoms or utilities or whatever, I mean, there's other names there. But I personally have spent 95% of my attention on the airports and the banks.
Okay, let's talk a country that may be on its way to having its own Malay show up. You can correct me if I'm wrong in your thoughts here, but it's Chile, the Argentinian neighbor that was recently mentioned here. Let's just kick things off with the current political situation. What do you see on the ground? And I know they actually have part of the election coming up after we record, but before this is released. So Ian will give context on that. But what's the timeline for the elections and how things are developing politically in that market?
Yeah, so you currently have a left-wing government that's been in power since 2021. That President Boric had tied his popularity, kind of his fate, to a constitutional reform amendment, which was supposed to get rid of the Pinochet-era constitution and replace it with a much more liberal, inclusive constitution. That constitution went to a referendum in front of the voters, and the voters rejected it almost 2-1. That kind of tanked Boric, since he'd established that was his main policy proposal. So his government has not really done much of anything since then. So people have been expecting kind of power to swing back to the right. It's just kind of a question of how far right it would go. But yeah, now we've gotten to election day. Chile has a system where unless you get 50% of the vote in the first round, then it goes to the top two candidates and they have a runoff. So the first round is November. No one is going to win in the first round. So then the top two candidates will face off in December. There's a communist who will be one of the two candidates, probably, because she's the only left-wing candidate running. So kind of all the support from anyone left of center is behind her. That said, she's only polling at like 30%, even though the left had a primary to put all of their support behind one candidate. So the betting market says she has virtually no chance of winning, but she will be one of the candidates in the runoff. And then on the right, the most likely candidate, you will already know this by the time you're listening to this, but at the time I'm talking, the most likely candidate is a guy named Cast, who was the runner-up in 2021. He has family members that were involved in the Pinochet government. He said that they did good stuff, were unfairly maligned. So like very muscular, right-wing, pro-business guy. And he said, like, voters, you got it wrong in 2021, but you've got the second chance to do the right thing, get the country back on track. It's a message that's resonated fairly well. He's been the leading guy on the right. Then kind of in third place is a guy who's even farther to the right, a libertarian named Kaiser, who got a start as a Ron Paul influencer, bringing Ron Paul's message on YouTube to Latin America. And somehow he's been able to springboard this into national popularity. I watched the presidential debate there. I didn't think he came off as like a polished speaker, really all that charismatic. So I'd be a little bit surprised if he managed to get the spot in the runoff. But it seems like either way, the right wing is either going to put up Cast, who is pretty far right, or a libertarian. So I think either way, people are going to be happy from a pro-business, pro-investor perspective. And Cast has specifically said like that Milei is doing a lot of stuff right, and he wants to implement similar style policies in Chile. So you could get a similar trade, smaller scope, because Chile's economy wasn't nearly as bad. It wasn't starting from such a low point as Argentina, but you could get a similar dynamic in terms of a really big change election in Chile.
Yeah, I was going to ask about how the local economy is doing. I get it. It is a really resource-rich country. You have copper and lithium. That I don't know what percentage of the economy it is, but it is a large part of it. How, like, what is the upside left in Chile? I know some of the stocks have done quite well. How are you positioning your portfolio for this election, or any sort of post reaction there? Is it playing the banking sector? Is it playing, the copper and lithium and commodity sector? How are you looking at it, and where would you invest, or what areas are you investing in Chile?
Yeah, I primarily own the largest bank, Banco de Chile, BCH, not Bitcoin Cash, but Bank of Chile, and also the ETF, so ECH, which is mostly involved in the domestic economy, but you get some of the copper and lithium exposure there. Actually, I think the largest holding is the lithium company. I'm not involved in any of the mining stocks directly. I think that's a sector that really rewards specialized knowledge rather than as a generalist, something I generally try to steer clear of. It's like mining and biotech and like oil services, things I just don't want to deal with myself. More power to people that like those. I think Chile will be very open to business over the next 4 years for resource investors, but I don't have a strong opinion on those names personally. But obviously, a rising tide will lift all boats. As you mentioned, copper is very important to the economy. The state still has a huge profit share kind of arrangement. It gets ton of the profits from copper in Chile, and then it uses that to fund kind of the state budget and a lot of investment in other sectors. Like Chile is now one of the leading exporters of fish, for example, the salmon industry, and that was all funded, like setting that up with state funds that they got from the copper. And so kind of they've used that to try to escape, what is it, Dutch disease? Like the idea that you just have all your money come from natural resources, and then if that money runs out, like you run into trouble. So I think the state's done a great job of using the copper resources to diversify the economy. So obviously, as an investor in Chile, you want copper to keep going up. Love to see it at $5-6. Yeah, I'm not trading that directly. I think the bank will get plenty more business. There will be more lending to do, as there's just more money flowing around the economy in general.
It seems very Nordic, I guess, in the way they're running it there. And the theme I'm getting: Argentina investing in the banks, Chile investing in the bank, Colombia. I know that you've invested, and I think talked about on this podcast before, what's it called, Banco Colombia. But I also know that you are interested in new holdings. So how do you think about that? And I know they're not operating in Chile or Argentina at the moment, but how do you think about those long term versus new bank? Is it kind of I want both sides of the barbell here, the legacy player and the potential disruptor. How are you looking at that as a shareholder there as well?
Yeah, I think it's a very fair question. From my understanding, yeah, Nubank is present here in Colombia, not present in Chile and Argentina, like you mentioned. Yeah, from the user experience I see in in Colombia, where I live, I see a lot of younger people using Nubank. I guess their average account size is, I don't know, maybe 1/5 of the size of the accounts at like Bancolombia or the other established banks. But I think that'll grow tremendously over time. If your average customer is like 25 or 30, somebody just out of college getting their first job, over 10 or 20 years, they're going to have a lot more spending power. New over time wants to be your brokerage, your life insurance, all that sort of stuff. And so, yeah, I think there's a tremendous runway for new to grow, but I don't think that makes the traditional banks obsolete, because most of your capital in a country like Colombia is with the eldest generation. It passes on when people die. And I don't think your eldest generation is moving their money out of Bancolombia anytime soon. So when you're looking at these banks that are trading at like 5 or 6 times earnings, like, is the durability of this earnings stream well beyond the 5 or 6 years that I need to get 100% of my capital back from the earnings? Yes, I think so. So like 20 years from now, are they losing major market share to Nubank and other fintechs? Probably. Is it something I think you need to be worried about over the next election cycle or two? No, I think the banks keep working for if you just want juice to the political trade.
Right. I mean, even in the United States, SoFi steals deposits, but does Bank of America still have a ton of deposits? Yes, and they're still way, way, way larger than that company.
Exactly. Yeah. Good example.
I guess I have a follow-up question here. So when you find a political situation in sort of a new country, one you haven't studied as much or whatever, something that you think is like a positive catalyst for the equities in that country, are there specific industries or businesses that you look for first? Is there, like, it sounds like banking's kind of a recurring theme. Are there other industries that you know or tend to see direct benefits from positive political developments?
Honestly, I think banks are just kind of easiest because they tend to be listed in New York. They like having access to U.S. capital, having a credit rating, that having people who can see their audited financials. Like, banking is a trust industry, and so as a Latin American bank, like saying we've been listed on the New York Stock Exchange for 25 years, it gives you a lot of credibility that, like, if you're a local cement company or a local hardware store or something, you don't really care about. So I think some of it's just accessibility. You have listed banks that are liquid, have options, that sort of stuff in New York. But yeah, in cases where I can trade the local market, like Mexico, for example, I look for stuff that's not banks. I don't own any of the Mexican banks at the moment, because in that market, I've been able to find other stuff that I find more attractive. So yes, please give us access to the local exchanges in Chile and Colombia and Peru, and I will go pick more off the radar stuff. But for now,
Yeah,
like, I can't really recommend local stocks in Colombia because none of my readers can trade them. So it's
yeah.
just
The story you've told on the newsletter about the hurdles you have to go through, even as a local, to invest in Colombian stocks is it's quite illuminating on the potential for reforms there. First, we maybe need to lobby to actually open up these markets before people can actually invest in a lot of these companies.
Sorry, I'm uninformed on this, and I didn't read that specific edition of your newsletter. Why can't someone trade stocks listed directly on the Colombian exchange, and what are the hurdles?
yeah. So for now, none of the U.S. or major international retail brokers have direct access to the Colombian exchange. I don't think, like, Interactive Brokers, for example, has access to many local markets, but I don't think they've never added Colombia. And my guess is they just don't view it as worth the hassle because they would have to clear Colombian currency. And there's only like a dozen stocks that trade more than a few hundred shares a day in Colombia. So why would you add the hassle of having to buy and sell and do depository for another currency where there's such a minimal marketplace? So if you want to trade Colombian stocks and you're not like a hedge fund that can get institutional clearing, then you have to physically come to Colombia and open an account through one of the banks here. And when I did that myself back in 2021, I just went down to a Bank Colombia office with my wife. Like, we want to open a brokerage account. They're like, "Are you sure? Like, Colombian stocks only go down. Like, we should open a CD for you. CDs make money. The stocks don't." I'm like, no, we know what we're doing. We're professional investors. They're like, "Okay, if you want to, but just be careful." So like, even when you go to the bank, they're like, "No, just get a CD. Like, what's wrong with you? Why would you want to invest in this stock market?"
Well, I guess speaking of Colombian stocks, I believe the major Colombian ETF is, I'm making sure I get the right ticker here. It's COLO, listed
That's
in
right.
New York.
Yeah, they changed it. It used to be GXG, but it changed to COLO this year.
Okay. It is up, according to your latest newsletter, up 132% over the last 3 years. That might have changed a little bit by the time this comes out. Why are Colombian stocks ripping higher right now? And ironically, probably doing quite a lot better than the CDs that your banker recommended.
Yeah, some of that was just starting from a very depressed valuation between 2013 and I forget if the bottom was 2022 or 2023, but they were down 70% in US dollar terms. And so you get a big drop like that, you tend to get a decent recovery when things turn. More specifically, Colombia elected a socialist president in 2022. He was the first socialist in our modern era. There was a new constitution in 1991 that created like the modern democracy in Colombia. And since that point, the government had been conservative for 31 consecutive years. And so it kind of had a reputation for being the most free markets, pro, like tied to the US, like the US ally in the region, all that sort of stuff. And so the moment Colombia elected a socialist, everyone was just like, "Oh, it's over. They're going the way of Maduro or Chavez or Castro or whatever." I talked to so many people in Colombia, like, "Okay, fine. We have to buy a house in Spain or buy a house in Miami. Like, it's over for us. Just look at what happened to the poor Venezuelans." And then President Petro, the socialist, took power, and it turned out he's not actually a very competent or effective leader. Like, you're gonna have socialists that have lots of charisma and are able to sway people to their way of thinking and all, or you can have ones who just don't. And so like, his approval rating almost immediately fell into the 20s. His effort to reform the healthcare system failed. His effort to have much more unions failed. Just like all of his major reform efforts failed. And so like, pretty early on, I was telling people, like, we're going to get through this. The Supreme Court's independent. The central bank's independent. Congress is against him. Like, just wait it out. And I think the market's starting to wake up to that. We now have polling that shows the conservatives are doing very well for the elections in May. And like the heir apparent, the successor, using air quotes, to Petro, is polling at like 10%. So it does not look great for carrying on the socialist legacy here in Colombia. I think once you turn the free markets back on, Colombia's been the target of several negative Trump tweets and tariff threats and all this year. But once Colombia has a right-wing president again, we'll get the same sort of messages that we're getting from Chile and Argentina, where Trump loves the Colombian presidency again. A lot more free trade. We're one of the few countries in Latin America that remains very loyal to the U.S. We've not tried to cozy up to China. So I think we're well positioned for the current trade environment. We're very close to the U.S. as well. Like, we're in South America, sure, but like, it's a pretty short flight from here to Miami. Pretty short ship transit for cargo. So natural ally to the U.S. in these times when countries are being forced to pick sides. I think the countries like Argentina that have decided to say we're going to be loyal to the U.S. are getting economic rewards for that. I think Colombia is going to benefit from that next year as well. Sorry, long answer, but hopefully I answered your question.
No, very, very illuminating. And you can just say the banks if you want, but what stocks are you looking at in Colombia? And I know there's really only a few, although one grocery store, as I remember, that you can actually invest in as a foreign investor.
This episode is presented by our favorite portfolio tracking tool, Portsaito. Do you know what your actual investment returns are? Well, if you're like me, then the answer is probably no, and that means you need to try Portsaito. Portsaito is the ultimate portfolio performance tracker. With Portsaito, you can easily aggregate your various brokerage accounts and instantly see your actual investment returns. That includes all your investments too, stocks, ETFs, and even crypto, if that's your thing. You no longer have to guess what your returns are. With Portsaito, you can find out in minutes how your returns stack up versus versus the market. And that includes a dividend tracking dashboard and even tracking of short positions. I've been looking for a tool like this for a long time because I was sick and tired of trying to track it manually, and Portsaito has finally built it. And for the first time ever, Portsaito is running a platform-wide discount to celebrate Black Friday. From November 26th to December 1st, you can get up to 40% off. That means you would get 3 months of Portsaito Pro for just $27. Again, that is portsaito.com. The link will be in our show notes. All right, folks, before we move on, we need to tell you where we get our data. Fiscal.ai. Fiscal.ai is the complete stock research platform for fundamental investors. I use the platform pretty much every single day. You'll see the charts in our podcast. You'll see it in our newsletter. This is our one-stop shop for stock research. They've got up to 20 years of financial data on all companies globally, including the largest company-specific segment and KPI data set on the internet. That includes metrics like Duolingo's daily active users, Oracle's backlog, Rocket Lab's revenue per launch, and literally millions more data points. They've also got earnings call transcripts, ownership data, equity research reports, and much, much more. If you want complete financial data at your fingertips, you need to check out Fiscal AI. And if you use our link, fiscal.ai/chitchat, you will automatically get 2 weeks of Fiscal Pro for free, no card required. If you want to upgrade, our link will also get you 15% off. Again, that's fiscal.ai/chitchat. The link will be in our show notes.
Yeah, the banks are the most obvious play, although Ecopetrol, the state-run oil company, is listed in New York as well. I think that's going to move a lot. There's the major problem now is that oil's only at $60 a barrel, so that's not great. I think that was trading at $25 prior to Petro getting elected. The irony that a guy named Petro is the most anti-oil president in South America. But I think once he's gone, I think Ecopetrol probably could double from where it's trading now. So that's something other than the banks. There's also a company that makes glass and solar panels. Glass primarily for residential condos and offices and so on, called Technoglass. That thing's gotten beaten up over the past year. Just people are worried about new builds in the U.S. They do most of their sales in Florida and in places where there's like Spanish-speaking contractors because they just buy from their friends back here in Colombia. So I think there's been a lot of worry around that with the slowdown in the housing market, kind of the big sell-off in Florida real estate prices. But I think that one could bounce back as well, particularly if interest rate cuts keep happening.
Okay, let's shift gears a little bit. We've got maybe 2 more questions, and then we had quite a few questions from people on Twitter and Substack, so we can ask those as well. But my first one for you, you mentioned earlier on the show that you think the Argentinian peso is a little bit overvalued at the moment. How do you determine whether or not you think a foreign currency is undervalued or overvalued before investing? And I guess, how much do you think about that prior to investing in a foreign market?
Yeah, so just say I'm only speaking about Latin America here, not speaking about other developed markets. Like, I don't really understand how like the Japanese yen or Swiss franc or those sorts of currencies are priced because they're like developed markets with very different fundamentals. For Latin America, I mostly think of it through the eyes of a tourist or someone who would live in a country. Like, how much is my rent? How much are Ubers? How much does day-to-day life stuff cost? How much would a car cost if I wanted to buy a car here? How much would a television cost if I wanted to here? Because that stuff should be fairly similarly priced throughout most of Latin America, or at least the more developed countries. It's like Mexico, Brazil, Argentina, Chile, all have fairly similar levels of like human development, so on. And so if like one of these countries is much more expensive than the other, it's usually because their currency is overvalued, or similarly, if they're way cheaper than the others, their currency is undervalued. It's like whenever I guess it's gone up a little bit since the pandemic, but like iron rule was like any like normal working class restaurant I went to anywhere in Latin America for like the last 10 years, a beer would be $1. It like did not matter the country. So if a beer was 50 cents or a beer was $2, it was like something off with either that restaurant or the local economy. Same like a budget hotel should be like $25 or $30, and that's pretty true wherever I was going. And so you just get a sense of like these prices seem normal, high, low. So like Argentina was way cheaper than everyone else under the prior government. I think that's why so many people on Twitter went there. They're like, this is amazing. Like the $8 steak dinners and all. Now they're like, this is $25 steak dinners. What's going on? It's like, oh, well, now the peso is overvalued. So you can just pretty quickly get a gut check for how things are valued, just thinking through it from a consumer standpoint. Because at the end of the day, the incomes tend to be fairly similar for most of these countries. Everyone sets their minimum wages fairly competitively with each other and so on. How do I think about currency from an investing standpoint? Over time, I think investors tend to worry about it too much, particularly the people that are playing the quarterly earnings game. Like, I don't care if my company beats or misses earnings by 2% because the dollar fluctuated. Over time, that stuff tends to wash out. I would point out that back when Trump first got elected in 2016, the Mexican peso was trading at 20 to the dollar. It's trading at 20 to the dollar today, give or take 5%. There's been no move in that currency in 10 years. I think the first time I traveled in Peru, it was 3.5 to 1, and now it's like 3.8 to 1. The Colombian peso was 3,000 when I moved here, and now it's 3,700. So only 20% depreciation over 8 years. End of the day, not huge moves anymore. None of these countries have super high inflation, with the exception of Argentina, which is kind of its own special child. But
yeah, there is that famous quote
as long.
Like what are the only two unique economies out there that people can't really understand are Japan and Argentina. They're not
Argentina, that's
developed,
right.
they're emerging. They're their own separate cases that seem to have just very unique circumstances. I think.
But yeah, I was just to finish that point. I was just gonna say, I think people are used to like the 1980s, 1990s when these countries would perpetually be running like 20% inflation, and you'd be constantly losing all your money due to depreciation. But that's not the. I mean, Mexico's averaged a 4% inflation rate over the past decade. Colombia's averaged a 5% inflation rate over the next decade. Is it like a smidge higher than the U.S.? Yes, but is it enough to lose sleep over? Not really.
Okay, and I guess the listener would maybe have the question, what's the problem for Argentina's economy as a whole if their currency is quote unquote overvalued? Like, how does that hurt Malay's agenda? Does it lead to inflation, or is the opposite going to lead to inflation? What does it, keep people from investing in manufacturing in the country? What is the issue if your currency is quote unquote overvalued?
Okay, yeah. So two issues. The reason why Malay wants the currency to be stronger is he wants to bring down inflation, and so if you maintain a stronger currency, that means your imports will be cheaper. Like if you let your currency devalue, then you have to pay more of your local money to buy, I don't know, whatever you can't make in Argentina, so like iPhones or whatever. So you would see higher inflation if you let the currency devalue. And his whole campaign has been, I'm going to fix inflation. Like the previous government caused 300% inflation, and under my rule, there will be no more inflation. So I think he moved too aggressively with like kind of the exchange rate quasi peg and so on to try to claim 0% inflation now, whereas you're not going to get from 300% inflation to 0% inflation in a year. So I think you can get there over 3 or 4 years, but take a more gradual approach. But yeah, if he leaves the peso being overvalued, then people are going to keep converting their savings from pesos to dollars, which puts pressure on the treasury and leads to like where the U.S. had to give Argentina a swap line. It also causes problems for your farmers, ranchers, miners, and so on, because they're competing against other countries that have a fairly valued currency. This is actually what undid the Argentine quote-unquote economic revolution in the 1990s, because Brazil next door went bankrupt in 1999. They massively devalued their currency. And Argentina and Brazil both export like iron ore, they both export copper, they both export cattle, like it's soybeans. It's like the same export list. And so when Brazil went bust and then devalued like 50%, and Argentina was hanging on to their 1-to-1 peg against the US dollar, like suddenly Argentina was 50% more expensive than Brazil. That's ultimately what caused Argentina to fail. It was just their exporters couldn't sell anymore. So yeah, I would urge Malay to try to find a stable exchange rate, but one that more accurately reflects the currency's value.
Okay, this question was from Twitter. I'm going to tweak it a little bit. The question was, which Latin American country turns rightward next? I'm going to change it to, which Latin American country do you think turns more business-friendly and investor-friendly next? I know that might correlate with right-wing, but from an investor perspective, that's what we care about.
I mean, if we're looking at the calendar of elections, Chile comes before Colombia, so Chile has to be the right answer. I think if I were assigning betting odds, I would say like 80% odds that both Chile and Colombia go to the right with their next election. But Chile will settle their presidency in December, and Colombia's will be May or June, depending on if Colombia goes to a runoff. Um, Also in the running, Peru votes next year, next April, I think. I have no idea who's going to win that. I mean, they just got rid of their president like a couple of weeks ago and replaced them with an interim. That country's, I think they've had 7 presidents over the last decade, so anyone's guess what happens there. So maybe it goes rightward, but I mean, it was already kind of in the center now. So I have no strong view on Peru. Then Brazil, I'd say that's like 50-50 coin flip on whether that goes back to the right next year or not. There's probably some smaller countries I'm forgetting, but I really only pay attention to the investable ones. So like if you want an honorable mention for Bolivia, I know they just elected a conservative, but you're not investing in Bolivia anyway, so it's not really relevant to this podcast.
Yeah. All right. Big picture question. And I think this is less on like investable theme right now of more and more of, okay, if I'm listening to this podcast, should I be trying to learn more about this market? And the question is, does the idea that South America goes full capitalist as opposed to all the socialist stuff that was trending 5-10 years ago, do you think that has legs and has more momentum now that Malay and some of these other things are happening?
Yeah, it's an interesting question. You could make an argument either way. I would say that Bukele was actually the first kind of sign that something different was happening, where you have this very young, very charismatic right-wing guy get elected in El Salvador, and they went from being one of the highest crime countries in the entire world to now being, I think, the lowest homicide rate in the Western Hemisphere, or at least very close. I know they're below the US and Canada. And so a lot of people have copied like Bukele's style. Like we need to put more people in jail, have more police budgets, less tolerance for crime, so on. So that sort of like right wing governance in terms of crime and on kind of social stuff that is spread throughout the region. I think that's probably not going anywhere. But from like the economic, like, are we going to have like Austrian economics and libertarians getting elected everywhere? I kind of doubt it. I think a lot of the right wing tide was just a kind of coincidence that it was mostly left wingers in power when the pandemic happened, and then throughout the world you had kind of a rejection of everyone who was in power during the pandemic. So I think that's kind of played well just in terms of how the timings went. And to be frank, just with the commodity prices being down throughout the 2010s, a lot of the economies here were pretty crummy. So like copper was down, gold was down, oil was down. So all these right-wing presidents who just said like, let us export our commodities and we'll reinvest the proceeds in infrastructure and all to give you a better economy, like that model didn't work in the 2010s, and it's starting to work now that commodity prices have gone up a lot. But unless like Chile, unless you can reinvest those into other industries and create a more sustainable model, we're still at the mercy of commodity prices. So like if there's another global bust, maybe the right wing moment goes away. So I mean, I'm optimistic for where we are now, and I think some of the stuff, like some of the more tough on crime policing stuff, I think that probably holds. But I'm not sure. I don't think we're getting like Malay style libertarians like running Latin America for the next 20 years. That's probably too optimistic.
Okay, yeah, that's probably a good middle ground there. Even if the dream of, the libertarian dream of South America doesn't happen, if you look at, United States valuations versus Latin America, it seems like there are some interesting opportunities if you can't find, if you're sick of the S&P 500 trading at 30 times earnings and you don't want to be chasing the latest AI name. There is some interesting stuff down there. And that leads me to, as we close out here, Ian, thank you for joining us again. Talk about some of the stuff you cover at Ian's Insider Corner and what type of investor or professional should subscribe.
Yeah, so it's my personal newsletter, which means it's not like it's not just focused on like one sector. It's not like a professional thing targeting like just Latin American stocks or just banks or whatever. It's whatever I find interesting where I think we can make money. So a lot of times that is Latin America, particularly now because Latin America has been cheap and the US is expensive. But I mean, full disclosure, I think half half my portfolio is still in the U.S. I like U.S. companies. Always looking for opportunities there. I like trying to invest in quality businesses wherever I can find them. Fingers crossed we'll get a correction in the U.S. at some point. Would love to invest more money in the U.S. So many great businesses in the U.S., but just not great valuations there. But yeah, I mean, I'm a professional investor. I opened a brokerage account the day I turned 18. This is my favorite hobby pretty much all my life. It's always looking for wherever I can make money, anywhere, any sector, just about. And so I think my newsletter is very interesting for other professional investors that are just open to off the beaten path ideas. 1 week that is going to be in Colombia. The next week, I don't know, it's US, whatever. Some weeks it might even be Europe, kind of all over the place. And I love reader comments, questions. We have very active discussions. So if you're looking at stuff, I'm always happy to bounce ideas off people as well. So.
All right, yeah, and I'll give praise to the newsletter. It helped me understand the Mexican airport operators and help me, make money investing in those. So if you're interested in that type of stuff, and again, all the what do I say? Stuff not covered on CNBC. Some hidden assets, some other countries you might not be interested. Ian covers them quite well. Ian, thank you once again for joining. This is a pleasure. Anyone that has any more questions about Latin America stocks, definitely reach out to Ian on Twitter or what have you, or follow his newsletter. But let me hit the disclosure and we can get out of here. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in once again, and we'll see you next time.